Hey guys, welcome back to the channel. This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decisions. In today's video, we're going to take a closer look at a significant investment move that's happening in the financial and fintech space involving HORAN Wealth LLC and Fiserv Inc. Even if you're not familiar with Fiserv yet, don't worry. By the end of this explanation, you'll understand what the company does, why large investment firms are paying attention to it, and why the market is reacting with both confidence and caution. HORAN Wealth LLC, which is a well-known advisory and wealth management firm, recently purchased a new position in Fiserv, picking up 23,349 shares valued at around $4 million. This represents about 1.2% of their overall portfolio, making it their 22nd largest holding. So while it's not the biggest piece of their portfolio, it's definitely meaningful, and it shows that HORAN believes Fiserv has long-term potential worth investing in. But here's where things get even more interesting. HORAN is not the only major player making moves. Several of the largest and most influential investment firms in the world have also been increasing or adjusting their positions in Fiserv. Vanguard Group Inc., which is one of the largest institutional investors globally, increased its holdings by around 1%, bringing its total to over 50 million shares, valued at more than $11 billion. JPMorgan Chase & Co. made an even more aggressive move, boosting its holdings by over 77%, now owning more than 15 million shares valued at around $3.3 billion. Massachusetts Financial Services also increased their stake, and Nuveen LLC initiated a massive new position worth over $1.7 billion. AllianceBernstein raised its holdings as well. Altogether, these holdings reveal something important. About 91% of Fiserv's stock is owned by institutional investors and hedge funds. That's a very high concentration, and it suggests that the financial giants believe Fiserv is a strong long-term business with staying power, even if the stock experiences fluctuations over time. So let's talk about the stock's financial performance. Recently, Fiserv shares opened at $63.96, and the company holds a market value of just under $35 billion. Its price-to-earnings ratio is around 9.89, which for a tech-focused company is relatively low, meaning the stock could potentially be undervalued or simply priced conservatively by the market. The company's debt-to-equity ratio is 1.15, showing that it uses both borrowed money and investor funds to operate, which is very common for large technology and service-based corporations. Fiserv's most recent quarterly earnings report showed revenue of $4.32 billion and earnings per share of $1.91. The company also reported a profit margin around 17% and a return on equity of almost 20%, both of which signal efficiency and stability in operations. These are healthy financial indicators, especially in an industry where innovation and reliability are essential. We also saw some noteworthy insider activity. A company director, Lance M. Fritz, personally purchased 10,000 shares of Fiserv stock at about $65 a share, which represents more than $650,000 of his own investment. Insider buying is often interpreted as a positive sign because when people inside the company, people who know the business deeply, choose to put their own money in, it usually signals confidence in the future. Even though insider ownership remains under 1% overall, this purchase is still worth noting. However, when we look at analyst opinions, things become more balanced. Several firms have updated their ratings on Fiserv, and many have shifted to a more cautious stance. Firms like KeyCorp and Goldman Sachs moved their ratings from buy to hold or neutral, and price targets were lowered by several research institutions. Across the broader analyst community, there are currently 11 analysts recommending the stock as a buy, 23 recommending hold, and 2 recommending sell. That brings the overall consensus rating to hold. What this means is that analysts generally see Fiserv as a stable, established company, but not necessarily one that is expected to surge dramatically in the short term. Additionally, MarketBeat noted that while Fiserv is solid and dependable, some analysts believe that there are a handful of other stocks in the market right now that may provide better near-term upside or growth potential. To understand why Fiserv continues to draw attention, it helps to know what the company actually does. Fiserv is a global financial technology provider that works behind the scenes of everyday financial life. It powers payment systems, banking platforms, digital transfers, debit card networks, merchant services, and other financial infrastructure systems across the United States and international markets, including Europe, Africa, Asia Pacific, and Latin America. It operates through three key business segments: merchant acceptance, financial technology services, and payments and network services. Essentially, whenever someone swipes a card, pays online, transfers money, or uses a digital banking app, there is a strong chance that Fiserv's software, networks, or data systems are quietly running in the background. It's one of those companies most people don't hear about directly, but nearly everyone interacts with its technology in daily life. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and hit the bell so you don't miss any updates. See you in the next video.